Investors and traders, welcome to the channel. Market chart pattern today is the 10th of September 2024. I hope everyone is having a great day. So we'll be taking a quick look at some of the key markets just before the inflation data or the PPI data that comes out on Wednesday. As always, this video is for educational purposes only and it's not a financial advice. So just a quick a recap of the timing model. We had the key timing coming in around the 3rd of September, this 29th of August to 3rd of September period, and we saw a pretty serious decline starting 3rd of September, and then we have another timing which is actually today 10th of September, over the video which was done over the weekend. We talked about this one. So what we have seen is market actually basically sees its decline. So last Friday, 6th of September, was especially in NASDAQ, was a very three deviation move to the downside, which is very, very, very rare. But it was also right at a point where several key patterns were completing, which we discussed in the video. And ever since that, we have seen a pretty nice bounce. So we'll take a deeper look a little bit later on. So just we'll see what sort of information comes out, but looks like we might be actually in a position where market is actually going to find buyers coming in. So this is the kind of buyers that we might have for tomorrow. We'll wait and see what sort of inflation data comes out Wednesday and Thursday's CPI. Okay, so we'll start by taking a look at the US dollar. Here we go. So US dollar has basically become a little bit stronger because of the support coming here from the structure. But overall, we are actually bearish the dollar. But after completing so many this bigger patterns around here, it remains a big trading range between 107 and 100. The chances are it might actually be able to rally anywhere between about 102 to about 103.50 is the kind of region the dollar could actually rally because it's just been going down for quite a long time. The other scenario is, of course, if it breaks 100, then it opens the doors for 99. Now, the really interesting thing is with the treasuries. So let's take a look at what is happening with the shorter end of the curve. So this is the 2-year treasury note. On the y-axis, we have the yields, and it's just broken down today. So that's just an indication that we are expecting a rate cut when the Federal Reserve will come out and do their FOMC meeting. So the 2-year treasury note market is already foretelling that. We had when the market was around here, we had a target of 3.9%. We not only met the target, we in fact exceeded that, and this is the kind of a gap formation where the market is right now. So if it moves below the lows of March of 2023, then in my opinion it could actually decelerate or move lower quite quickly. So here we could also find some support just because of the structure as well. But we already had a pretty good support or bounce rather right to the 50% of this swing. And now, of course, the weakness exists, meaning lower yields. Really interesting price action that took place in the 10-year treasury note. So here we go. So 10-year treasury note had completed this big ABCD pattern, and then what it did was it retraced lower, and the retracement was exactly to how much it had retraced back in the month of May, and it completed that. At one point, it did look like maybe there was a chance it could do an ABCD lower, but of course, that did not take place. And today, this market was really strong, and it has taken out convincingly the highs of 5th of August, and then of course the highs of Friday, 6th of September as well. And in my opinion, it's now heading towards this region of 116 to 117. And on the longer term, on the weekly chart, of course the week is not complete yet, but pretty strong looking start of the week. On clearing that, it has the potential to go as high as 118 to 119, and that will be 38.2% retracement for um, the 10-year Treasury note. And then if we take a look at the bonds, okay, so this is the long bond futures. Bonds, after hesitating for a few days, in fact, 5th of August was when the market actually found pretty good resistance from point B. And what we have seen is it's very similar pattern to what we have seen in the treasuries. I've just not drawn it like that. So if we just have a market symmetry concept, it's pretty much there. So it has actually cleared above point B. So that's pretty big news. And in my opinion, now it's heading towards 128.06, followed by 131, and the completion of this ABCD just right at the 132 level. So that's going to be a pretty interesting what is going on, because what it means is that as the bond market moves higher, the yields are moving lower for the 30-year bond futures. So which means that that should have an impact on longer term debt, such as mortgages and stuff. So here we go. This is the black ABCD bigger pattern that we saw on the daily chart. 133 is kind of also possible on this one, and the real test will come right here at close to 140, around 139, because that's the 38.2% retracement of the highs back in March of 2020 to the recent lows of this bear market, and that will be a true test where we could find pretty strong resistance, to be honest, for the rates market. And let's actually also take a look at the TLT. So I think it's gonna go and complete this ABC around 104 to 105 level. Okay, now let's take a quick look at the gold market. I'm gonna move down to, okay, so on the weekly chart you can see it's just range bound price behavior, but tomorrow's news could actually have quite a lot of price action in this market. And of course, with this market being still sideways but moving higher, the chances are, if the PPI data is softer, meaning that showing the inflation pressure is actually receding, we could actually see a bounce up towards the 2600. Ultimately, we have a big pattern completion around the 2700 mark. So I think the market is slowly creeping up to that level. So this is for gold. Now let's have a quick look. Let's take a look at the NASDAQ 100. Here we go. This is the daily chart of NASDAQ 100. So Friday, 6th of September, this is where the market closed, very close to the 61.8% retracement. But not only that, it was also completing several other pattern formations. So just a reminder of what we looked at over last Friday. So we had these several ABCDs completing right there, and we have seen the market actually notch up quite a bit, about 400 points. So it's formed pretty good support from here, but on the other hand, it has still not been able to recover to the 38.2% retracement, which comes around the 19,000 mark. So the chances are this market is actually heading a little bit higher, at least to 19,000. This is where we'll have some key resistance level, and the market is able to actually break above that. That's going to be really positive. And the other reason is that if we just look at this market bearish market symmetry concept, then this was the biggest move or corrective move in this down move, in this entire decline. And if the market is able to close above this, then it'll be actually above the 19,000 convincingly. It will also be the break of this bearish symmetry, which would indicate the market is actually getting stronger and actually likely to move higher, perhaps much higher. So this is what we are looking at in the NASDAQ 100. And if we take a quick look at the SPX S&P 500, it has also held its lows of Friday, 6th of September. But on the daily chart, you can see still inside bar. This was a lot of selling which took place 6th of September. So after some consolidation, as long as Nasdaq actually also shows strength, which has been the weaker one, the S&P 500 is definitely gonna show strength in my opinion. And if we were to just take a look at this on the futures chart, here we go. Last couple of trading days, the market has found support. I am expecting the market to actually, move higher. And what it has done, something different to Nasdaq, which just shows this market is actually stronger. It's right at the 38.2%. So if it is able to close above this 5,500 mark, in my opinion, that's very positive for this market. And just on the moving to the weekly chart, so this is like a longer term. We have some higher targets as well. There's a possibility that S&P 500 could in fact go and complete this big ABCD around 6,100 on the futures. It's also a little over 6,100 on the cash as well. A quick look on the Dow Jones. So the Dow Jones, let me actually move back to the daily chart. Here we go. Dow Jones is actually also doing something similar, but this market is a little bit different because it's got certain stocks such as Goldman Sachs, which are part of financial, and they are forming really interesting patterns as we speak. Um, and also, this index is price weighted; it's not market cap weighted. So we have seen, quite a lot of confusion in this one because it's a big down, big up, and just an inside bar. So big up, big down, big confusion. Uh, so this needs to resolve. So here, really, it's a really massive trading range between this and this. So what it means is that the market is able to get above convincingly close above 41,000, 41,050. Then it's in a pretty good shape. Then it's gonna go and make a new all-time highs. On the weekly chart, you can see the this pullback actually came from the completion of this ABCD, but it's an extended CD leg of AB. Um, Getting above that, I think 44,000 is gonna be the kind of level to take a look at, and the big ABCD completion even higher. So we'll take one thing at a time. So again, all depends upon how the market is gonna trade. Um, but we are looking at some key support levels, especially in Nasdaq being held. In my opinion, as long as those are held, the chances for the market to actually rally are much higher, are getting higher after having the significant sell-off. And let's take a look at Russell 2000. Okay, so I think this one has to do quite a lot of work on the daily chart. You can see it's just not as strong. Um, so I think maybe tomorrow's numbers, if they're going to be on the CPI numbers, the inflation numbers, they're going to be on the softer side. We could see some rally in the small caps. Um, there is an argument that the rate cuts will help small caps. Whether the small caps will actually begin to lead, I'm not sure of that. I think there's a fair amount of if you see all this selling, there's a lot of weakness in here. From a technical perspective, the market has to do a lot of work to actually recover a lot of technical damage done, especially when this retracement happened from the 78.6% level of this sell-off, which we saw bottoming on 5th of August. It really needs to move above that for it to have any chance of being a stronger index for the stocks. So just a really short video just to catch up a few things. Let's take a very quick look at some of the um, sectors. So if we just take a look at XLE Energy is bearish now, just closed below the 61.8% retracement. So here we go. Yeah, I might just find some support a little bit lower, but the energy is actually pretty weak. And if we take a look at crude oil, so the crude oil has gone and formed new lows, um, and I believe the chances are that's gonna go and actually touch the 63 area, which were the lows from 5th of May, 4th of May 2023. So, I mean, a lower crude oil means two things. A, it should be helpful for inflation because it should bring some prices down, because if the energy prices are higher, then they get reflected within the movement of products and quite a few things. The other thing is it could be because of lower world demand. So, it has some negative aspect that maybe the demand in globally is slowing down. So we are seeing this kind of price action in crude. Um, but we also have seen some really technical situations, such as in March or in April of 2020. We had this big crash in the crude market where the actually the price went negative on futures, because there were just too much oil being produced. There was just not enough place to even store that. And of course, we know that in March of 2020, most of the world was suffering through lockdown, so maybe there was not a lot of demand as well. And we also had in the US the shortest recession in the modern history. Okay, and then let's take a look at XL XLY. This is the consumer discretionary. So the consumer discretionary had has had a bounce back, but it's still, a retracement, because still right at the 78.6%. Um, and if we look at some of the retail stocks, we'll take a look at, let's say, Dollar General DG. Look, this stock is just massively down, and this just tells you there's a lot of stress with the consumers, especially the discretionary kind of items. Consumers might be more willing to spend on essentials. So there is something really interesting if we take a look at this one. If we take a look at some of the online retailers such as Amazon, um, you know, if the Dollar General, these kind of stores have certain kind of issues, it's gonna come into online as well at some point. Maybe it already is coming, especially in the discretionary space. But if we take a look at Walmart, look, the Walmart stock is making new all-time highs, so that's very interesting. Um, Clearly, the this stock is performing better than Amazon at the moment. So that's an interesting scenario. If we take a look at Target, Target stock is not doing that well. I think the company has had some issues with its inventory management, perhaps. Um, and what else can we take a look at? So yeah, I mean the consumer discretionary is actually under stress at the moment. Then if we take a look at utilities, yeah, they are strong, but they're also reaching a point 78.6 1.6 expansion on 78 dollars, where it will be completing the extension. So I think we'll see some pullback at this level when it gets there. Then let's take a look at the consumer staples. You can see a clear distinction between um, discretionary and what the staples are doing. Let's take a look at industrial. So the industrial has had a bit of a pullback, but still quite strong. And if we just take a look at stock of Coca-Cola, it's just, I believe it might have made new all-time highs. So you can see that consumers still are consuming Coca-Cola. It's not gonna go away. And then if we take a look at the stock of McDonald's, so the McDonald's is kind of range bound, but still top end of the range. Um, so there you go. I think the way things are with the high rates is just impacting certain kind of stocks, and then with the prospect of interest rate cycle to starting where the interest rates are likely to move lower is going to benefit certain kind of stocks. So there is a huge element of big rotation as well. Um, so it's a really interesting time at the moment. One has to be really careful in picking stocks because of the different kind of environment that we are entering. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.